if we'd have followed the map as NASDAQ did perfectly, Bitcoin today should be at 160,000. So that's the discount we are to fair value according to liquidity. So that was the feature of the year. It was a technical year because of what happened. It should have been a lot stronger finish to the year. But what we do know is we've got a lot of liquidity coming in 2026.
Before we tackle all these topics, I mean...
And also just to go back to that, is the other thing people struggle with in their heads is, yeah, we can talk about Bitcoin, and Bitcoin was pretty flat. But then anything further out the risk curve gets hit more. And so, memes went down 99%, more speculative stuff goes down 90%. The kind of newer stuff that's still high quality goes down 65%. Solana goes down 55%. ETH goes down 40%, and Bitcoin is flat. It's that whole thing, and that's what really kind of hurt everybody.
$160,000. That is where Raoul Pal, macro investor, former Goldman Sachs, founder of Real Vision, one of the most accurate macro forecasters of the last decade, says Bitcoin should be trading right now, not at some future price target, not a prediction, not a hope, right now, according to the same liquidity model that has tracked Bitcoin's price action with 90% accuracy across its entire existence. So if that's true, if Bitcoin is genuinely sitting at a 40% discount to where the macro says it should be, then we have one very important question to answer. What happens when it catches up? Before I get into Raoul's full argument, which is one of the clearest, most structured bull cases for 2026 I have heard from anyone with serious macro credibility, I want you to understand what actually happened in 2025, because most people got the story wrong. 2025 wasn't a failed crypto cycle. It wasn't proof that Bitcoin was broken. It wasn't evidence that the 4-year theory is dead. It was a liquidity event, a specific identifiable technical dislocation that disconnected Bitcoin from the very map it had been following perfectly. The NASDAQ followed the global liquidity model exactly. Technology stocks followed it exactly. Bitcoin, which had been tracking it at 97.5% correlation, broke away on one specific day, October 10th, during the government shutdown, during a massive liquidation event that nobody has fully explained yet. And according to Raoul, that single break created a gap, a discount, a distance between where Bitcoin is and where the macro says it should be. And in 2026, with liquidity coming back into the system from multiple directions simultaneously, that gap is about to close. Here's his full argument.
90% of all Bitcoin's price action is explained by global liquidity. So for that to be true, that 2026 is a bear market year, it must be true that global liquidity is going to be falling. There is no evidence of that. If that were to be true, then we've got, we then kind of nuke the economy, because you would be reducing global liquidity when the ISM is at 47, which is manufacturing is basically at a recession.
Yeah.
It doesn't happen that way. It's not going to happen in a year of a midterms of a very aggressively pro-economic or pro-business leadership. It just doesn't make sense. So for that to be true, and we've got to roll all the debt, that means they're going to lose control of the bond market, blow up the banking system, blow up the stock market. It doesn't feel right.
Mm-hmm.
It doesn't feel right. And with low inflation, relatively low inflation. Why would they do it? So that's what's incongruous for me. So you have to say, oh, that correlation that has been in place since Bitcoin's existence at 90% correlation and 97.5% with the NASDAQ is false.
What do you think is being, well, let's say Trump has been super positive about crypto. He has been doing a lot. We've seen the Genius Act. We are quite sure that even between the upload and the recording, there might be the Clarity Act. But then there's the same sort of mantra happening. People have high expectations of Trump going into the office for crypto. And then the reward is that the markets are crashing while fundamentally all the institutions are adopting crypto. What do you think his game plan is when it comes to crypto?
So his game plan is he got voted in. He was funded and voted in by the crypto lobby and the tech lobby.
Mm-hmm.
So his job is to continue to give them what they want. So he's clearing the regulation, putting the path down, making it very clear that they're pro-crypto. But then the crypto people are like, well, why has my number not gone up? Okay, so let's think this thing through again. If liquidity is not flowing, where's that money going to come from? The institutions. But we haven't had the Clarity Act. So why would most of them do it? We get some. We saw ETF flows into Bitcoin and stuff like that. Great. But we haven't had the floodgates yet because it's not been cleared. So, and then we say, yeah, but the banks, they're all building on it. What have they actually launched? Nothing yet. They're just all starting to ramp up because the Stablecoin Act came through, so they can start with that. Then the Clarity Act needs to come through. So we've got no liquidity and only the financial system kind of revving its engines to get going, but they're waiting for the checkered flag to be raised so they can start the race. And so, but everyone's like, well, I thought Trump was going to pump my bags. He's doing everything. He's telling you that they're going to roll the debt, they're going to use the liquidity through the banking system, they're going to give you fiscal stimulus, they're going to force rates lower, they're going to change the Fed chairman, they're going to do everything they can to pump your bags whilst giving you a regulatory green light.
Let me break down the 4 things Raoul just said that most people will hear once and not fully absorb. First, the 90% correlation argument. This is not a feeling. This is not vibes. This is a measurable, back-tested relationship between global liquidity and Bitcoin's price that is held across Bitcoin's entire existence. Raoul's point is almost mathematical in its logic. If you believe 2026 is a bear year for Bitcoin, you are simultaneously predicting that global liquidity falls. And if global liquidity falls while the ISM is at 47, which is manufacturing recession territory, and while a pro-business administration is doing everything in its power to stimulate the economy, and while midterm elections are 18 months away, then you are predicting that the government deliberately nukes its own economy in the most politically dangerous period possible. That doesn't happen. Second, the checkered flag moment. Raoul's analogy is the most important thing in that entire clip. The banks are not waiting because they don't believe in crypto. They are not waiting because they don't have capital. They're waiting because the regulatory green light, the Clarity Act, has not fully dropped yet. The Stablecoin Act came through. The path is being cleared. But until the flag drops, the engines just rev. The moment it does. And Raoul believes that moment is 2026. The institutional capital that has been sitting on the sidelines for years doesn't trickle in. It floods in. Because these institutions have already done the research. They've already made the decision internally. They are just waiting for legal clearance to execute. Third, the Trump game plan. Raoul strips away the noise here in a way nobody else is doing. People are angry that Trump hasn't pumped their bags. But Raoul's point is that Trump is doing literally everything simultaneously. Fiscal stimulus, rate cuts, banking regulation changes, regulatory clarity, tax breaks for manufacturers and service workers. And all of it points to the same outcome: liquidity into the system, growth into the economy, and eventually money flowing into risk assets. The frustration is a patience problem, not a thesis problem. Fourth, and this is the one that should shift your entire mindset. Bitcoin is sitting at what Raoul calculates as a 40% discount to fair value according to the liquidity model it has tracked for its entire history. 40%. Not overvalued. Not fairly valued. Genuinely, measurably, according to a model with 90% historical accuracy. Undervalued by 40%. So here's the question I want to leave you with. If a credible macro investor with 35 years of financial market experience, who has been right about the macro direction more times than almost anyone publicly calling markets, tells you that the asset you hold is 40% below where the model says it should be, and that the liquidity conditions that drive that model are about to improve significantly. What is the correct emotional response to that? It's not panic. It's not second guessing. It's not refreshing the price chart every 20 minutes. It's patience. Raoul sold Bitcoin at $2,000 in 2017 thinking he was a genius. It went to $20,000 7 months later. He spent the years since understanding that lesson deeply. His conclusion, which he states clearly in this podcast, is that the people who compound wealth in crypto are not the people who trade perfectly. They're the people who understand the macro, hold their position, and add when everyone else is scared. The macro is clear. The liquidity is coming. The institutions are revving their engines. The checkered flag hasn't dropped yet, but it's about to. Subscribe. Every day we break down the conversations that actually matter for your financial future. See you in the next one.